domestic online lending companies thought, we've exhausted all the competition at home, so let's go overseas to make money. They looked at India with its population of over 1 billion and plenty of poor people. It seems like a perfect blue ocean market. So they threw their money in and bombarded the market with ads. 3-minute loan approval, no collateral needed. Sound familiar? With my 5 years of experience in the financial industry, I knew exactly what they were thinking. Give out the money, let interest accumulate, make quick profits, and once they've reached one batch, they'll go for the next. No risk, just profit. But they never expected to run into tough opponents. The whole plan fell apart. As soon as the money arrived, people instantly uninstalled the app, changed their phone numbers, and disappeared without a trace. The lending companies rushed to collect, but when they called, all they heard were foreign languages they couldn't understand. Finally, they managed to get through, only for the person on the other end to sincerely ask, what money? Isn't that your gift to us?
Huge online lending giants in China, who swindled countless people, originally planned to go to India for a big profit grab, but instead, they ended up being treated like a national subsidy by the Indians. Now, they're all crashing in India, pouring $5 billion into the market, and losing $2.5 billion right away. They never saw this coming. This time, they were the ones getting swindled.
The blog explained, in 2019, after a major crackdown in China, these online lending companies rushed into India like they discovered a new world. With a population of 1.3 billion and just starting to popularize smartphones, it seems just like China 10 years ago.
When they got there, they found it even better than they imagined. The cost of acquiring customers was only 1 yuan, 10 times cheaper than in China. Loan interest started at 40, and some even went up to 200. No one was keeping an eye on it. Pure usury. They were lending out tens of millions a day like it was nothing, thinking to themselves, with this much money, how can we not make a fortune?
Out of 100 borrowers, 50 disappeared without a trace. Despite trying every possible method, including aggressive domestic collection tactics, the companies faced continuous failure. They tried sending collection messages, but borrowers claimed they couldn't read. They sent legal notices, which were tossed straight into the trash. They attempted home visits, only to be nearly attacked by the entire village. When they tried to use credit reports to pressure borrowers, they learned that only 9% of people in India had credit scores, making the threat ineffective. The worst part came when they tried to involve borrowers' friends and family by sharing debt information, hoping the pressure would force repayment. Instead, those contacted thought it sounded like a great idea and joined the trend. As a result, not repaying online loans became a nationwide movement. Some even organized loan default groups to teach people how to default collectively and report platforms. What frustrated these companies even more was the added challenge of new regulations from the Indian government. The Reserve Bank of India introduced new rules requiring platforms to disclose fee structures and capping interest at 18. India also enacted a personal data protection law, mandating that platform data must be stored locally or face fines of 500 million RMB. If companies illegally collect customer phone numbers or contacts, they could face fines of up to 2.2 billion RMB. These regulations caused many Chinese platforms to collapse as they failed to comply or faced unsustainable bad debt rates. And in the end, the online lending companies had no choice but to resort to legal action. However, they quickly discovered that in India, suing a borrower could take anywhere from 3 to 5 years, from filing to trial. Even worse, some borrowers filed counterclaims, accusing the lending companies of predatory lending. They hired lawyers using the loans they had taken out. This led to a dramatic rise in bad debt, reaching 80, with billions of dollars essentially wasted. The companies, which thought of themselves as harvesters, found out they were the ones being harvested. Soon, a loan default industry chain emerged. Some individuals specialized in recruiting and training borrowers, teaching them how to take loans from multiple platforms at once, avoid repayment, and disappear quickly. These Chinese platforms, many of which operated without licenses, had nowhere to turn for help. To make matters worse, India later modified its foreign investment policies, requiring foreign companies to hire Indian directors. Some platforms hired Indian directors who, upon discovering illegal operations, simply ran off with the money, completing a black market scam. In the end, only a few platforms, whether legal or illegal, managed to recover their principal. Industry insiders revealed that some platforms lent out 5 billion rupees over 2 years, with a bad debt rate of 47%, which was considered average in the industry. Some platforms saw bad debt rates soar to 80%. In comparison, the bad debt rate for domestic Chinese platforms typically ranges from 2 to 8. The disparity was staggering, like comparing two entirely different worlds.